This content is for educational and entertainment purposes only. It does not constitute investment advice.
I've been waiting months to make this video because I just added a new feature to Orderflow IQ, the most comprehensive order flow based indicator on TradingView that I think will take our order flow analysis to the next level. Let me explain what I mean. Check out this footprint on my chart. Now, you might be thinking, sure, there's tons of people that have made footprints on TradingView, and I can find this kind of information anywhere. Now, whether or not that's true, there's one big difference between Orderflow IQ's footprint engine and the footprint engines that you'll find anywhere else on the entire internet. That's right, anywhere. Let me show you. Now, before I get into why this is such a groundbreaking feature, be sure to like, comment, and subscribe with notifications on. We're working our way towards 8,000 subscribers strong, and your support helps us keep creating the videos we love for the audience we love. And if you haven't already, be sure to follow us on TradingView and Twitter so you always know what we're up to before we ever make a YouTube video about it. And if you're looking for a trading home, check out the Trading IQ Discord community, where we have active traders discussing strategies, analysis, and much more each and every day. Check out what happens when I turn on this setting, CVD levels. The footprint looks a lot different, and that's because the Orderflow IQ footprint engine is capable of storing memory, just like traditional CVD. That means that all the tick levels you see generated by the footprint engine actually store volume delta, buy volume and sell volume, delta percentage, and all these relevant metrics across time in memory. And yes, all with tick data, making it a genuine footprint engine. And what makes the CVD footprint engine so important is we get to see the development and strength of both buy-side liquidity and sell-side liquidity over time at specific price areas. And that's information that you just can't fully see inside of a regular footprint chart. Let me give you an example of what I mean. Check out this specific price area where my blue line is. Now, this is a super important price zone in one way that I use the CVD footprint engine. Now check out the CVD and CVD percentage at these specific price blocks. We can see the CVD percentage is negative 20%, negative 13%, negative 12%, and we even tick below this tick zone into an area with negative 32% CVD percentage. All this means is that continuously in this price zone, more market order sells were filled than market order buys. But price isn't moving substantially lower or breaking down from this price area. Now, why isn't price moving lower if there's more market sells than there are market buys? And that's because there's a lot of resting buy liquidity at this level. And all that means is that in the order book, there's a ton of buy limit orders that are effectively absorbing the aggressive market selling that's coming in at these price levels. Now, if that resting buy liquidity wasn't there, then price would just continue to shoot downwards because the aggressive market sells are overwhelming the buy side of the book more than aggressive market buys are overwhelming the sell side. But this simply isn't happening, despite there being a large amount of market sells hitting the book. And later on, price rejects this level entirely and moves back up into a new range. But this isn't the end of our level. In fact, it's still super important because by looking at the CVD footprint engine and seeing that there was aggressive market selling at this zone that got fully absorbed from buy-side liquidity, this now becomes a potential breakout area. And we can even see on the next test of this price zone, market sellers pushed price into the liquidity shelf, and once again, buy-side liquidity absorbed market sells. But here's the important caveat to all of this. The more and more that a liquidity shelf is traded at, the more and more that the defending side of the order book, where the passive orders are located, are depleted. And eventually, once those passive orders are depleted, we can get a full price breakout, where price enters a liquidity vacuum or a thin book zone, and a small amount of effort is able to produce a large result. And that's exactly what we got here, specifically on this candlestick, where the downside breakout occurred. Now, before I go over this breakout, because it's really important, let's take a look at the actual sell volume inside of these blocks. So on the first block, if we look at the bottom statistic for each of these tick zones, we can see the sell volume at the level. So the first block had negative 2.6 thousand. The second block, negative 3,000, and the third block also negative 3,000. Now, buy side only had 1.76, 2.3, and 2.3, so sell volume dominated, but the buy side liquidity in this zone absorbed the market sells. Once the level is retested again, we have more sell volume, negative 3.2K, but we still fail to break the zone. And then finally, on the candlestick that breaks below the zone, we have negative 3.9K sell volume. Now, this is the highest amount of sell volume across all attempts at breaking this level, but that's not why the level broke. The level broke because each and every time price trades at this liquidity shelf, buy-side liquidity is depleted. And once that buy-side liquidity runs out, well, we enter a liquidity vacuum. And that's where we get a downside breakout, exactly like you see on my chart, where a negative 1.15% move fully occurred after the liquidity shelf at my blue line here was completely depleted. And this is one example of exact opportunities that I'm looking for with the CVD Footprint Engine. And funny enough, this level actually completely flips significance later on, and a sell side liquidity shelf forms at the price area until, you guessed it, where sell side passive orders are fully depleted, thereby pushing price past the shelf into a thin book zone, and we get an upside breakout this time instead of a downside breakout. Again, this is one of the exact sequences that I look for with this CVD Footprint Engine. And if I simply just used a regular footprint itself, it's much harder to determine what the trend in market buying and market selling at each particular price level actually results to. I have to sort of figure that out on my own, mark specific price areas, and use imperfect procedures to try to find these liquidity shelf and depletion opportunities that I just discussed. And this is why I think that the CVD Footprint Engine is a cutting-edge, groundbreaking improvement to order flow analysis all across the board. Now, just a heads up, Orderflow IQ is a TradingView indicator that is unlocked through our affiliate terms. Our affiliate terms are always changing, so be sure to check the link in the description for more information on the current campaign. And if you decide that you're interested to try Orderflow IQ, or you follow the link, we may earn a commission. And of course, nothing in this video is financial advice. Always do your own research. If you haven't already, be sure to like, comment, and subscribe with notifications on. We're working our way towards 8,000 subscribers strong, and your support helps us keep creating the indicators we love for the community we love. That's going to be it for this video. Thank you so much for watching, and I'll catch you in the next one.